India is entering a transformative decade, poised to sustain real GDP growth of around 6.57% annually through 2030. This robust momentum is driven by strong domestic demand, rising public capital expenditure, and a gradual revival in private investment. The country's macroeconomic foundations are solid. Inflation has moderated from pandemic highs, and both fiscal and monetary policies are balancing growth with stability. Structural enablers such as a young, growing workforce, rapid urbanization, and digital public infrastructure are reinforcing India's global competitiveness. As the world's most populous nation, India's economic story is increasingly shaped by its ability to integrate into global supply chains and pursue climate-aligned growth. Against this backdrop, five sectors stand out for their high growth potential and strategic importance. First, renewable energy and grid decarbonization are at the heart of India's climate and energy ambitions. The country targets 500 GW of non-fossil capacity by 2030, with renewables already exceeding 180 GW installed. Strong policy support, falling solar and wind tariffs, and green finance are driving double-digit growth. Next, electronics and semiconductor-led manufacturing are powering India's export diversification. The electronics production crossing Rupee 9-10 lakh crore in India, now the world's second-largest mobile phone manufacturer. The sector benefits from government incentives and global supply chain shifts. Semiconductor initiatives and a deepening talent pool are catalyzing a move from assembly to advanced manufacturing. These two sectors are not only critical for sustainability and technology leadership, but also for job creation and export growth. India's pharmaceutical and biotech sector is a global powerhouse, valued at $60 billion and supplying over 20% of global generics. With strong export performance, policy support for R&D, and rapid growth in biosimilars and vaccines, India is cementing its role as a healthcare manufacturing hub. Meanwhile, fintech and digital financial infrastructure are transforming how Indians transact and access credit. UPI platform now processes over 10 billion transactions monthly, underpinning a projected $150+ billion fintech market. Regulatory sandboxes and digital public infrastructure foster rapid innovation and financial inclusion. Finally, transport and urban infrastructure are the backbone of India's growth. Massive public investment, flagship programs like Bharatmala and Gati Shakti, and modernization of roads, rail, and metro systems are enhancing connectivity and productivity across the country. India's policy landscape is increasingly supportive of investment and innovation. Corporate tax rates have been reduced, and sector-specific incentives like production-linked incentives, PLI, and liberal FDI norms are attracting global capital. Digital public infrastructure such as Aadhaar and UPI lowers transaction costs and supports inclusive growth. The global stage, India is benefiting from supply chain realignments and strategic partnerships in semiconductors, clean energy, and technology. However, risks remain. Geopolitical shocks, commodity price swings, and regulatory changes can impact sectoral prospects. Still, India's diversified growth drivers and reform trajectory provide resilience and strategic importance, making it a compelling destination for long-term investment. Summary: India's macroeconomic outlook for 2024-2030 is underpinned by a unique combination of growth, resilience, and reform. The five high-growth sectors, renewable energy, electronics and semiconductors, pharmaceuticals and biotech, fintech and transport and urban infrastructure, offer diverse opportunities for investors and businesses. Each sector is supported by strong policy frameworks, robust demand, and increasing integration with global markets. As India continues to urbanize, digitize, and modernize its economy, these sectors will be central to its next growth wave. For decision-makers, the message is clear: India's transformation is accelerating, and the time to engage with these sectors is now.